In this video, we're going to be going over the PowerPoint slides for Chapter 2, Money Management Skills. You can see what the objectives are, okay? What are the main components of money management? Look a little bit at creating a personal balance sheet and cash flow statement, and thinking about what can you do as far as putting together a personal budget. And then also setting your goals and things. So, when we start talking about money management, what we're talking about are the day-to-day types of things that we do as far as what are we spending our money on? What are some of the decisions that we're making as far as saving is concerned? When you think about the various portions of money management, first of all, you have to think about what kind of documents am I keeping? You need to make sure that you have good record keeping as far as so that you can do well as far as your money management is concerned. Putting together some personal financial statements, all right, as far as your budgeting and things like this. So when you start thinking about the whole idea of how do I actually manage my money, these are some of the key things that come into play. Now, first of all, some of the record keeping that we need to make sure that we're keeping good records, okay? When it comes at the end of the year, when it's time to file our taxes and things like this, we need to make sure that we have the right records for all of that. What it does is it helps us make sure that we're handling our daily affairs effectively. Okay, are we on time as far as paying our bills? How are we doing as far as our financial goals? Making sure that we have good tax keeping records, things like this. So these are some things to think about as far as your record keeping is concerned. Now, the things that we need to make sure that we keep at home. Things like personal and employment records. In other words, maybe you received an offer from an organization. You want to keep that offer letter in there. Tax records. At the end of the year, you need to make sure that you have everything necessary for filing your taxes. Credit records, so that you can see what's happening as far as your credit accounts. Is somebody tapping into some of those things? Things like this. Housing records, insurance, estate planning, and retirement. It's never too early to start thinking about retirement. So some of the things that you want to keep and how long you may want to keep them. Things like your birth certificate or copy your birth certificate, any kind of wills, things like that. You need to keep it permanently. These are things that should be kept more in a lockbox type thing. Personal property investments, as long as you have them, okay? Real estate stuff, keep it indefinitely, because sometimes you may need to go back to find out what happened, how much, things like that. Copies of tax returns, at least 7 years or 10 years or better. Little story. I've been teaching at Rockhurst University for over 30 years. A couple of years ago, I got an email from someone saying, "Congratulations on your 17-year anniversary." I said, "Well, I appreciate that, but I've been here for over 30 years. They said, "Well, I'm getting this from the payroll records." So I contacted Human Resources, and they said, "Yeah, we have you now, and it's starting 17 years ago." I said, "But I've been here for over 30 years. They said, "Well, no, that's not what the records say. Okay, you're going to have to prove to us." My wife has gotten on me in the past as far as being kind of a pack rat. I was able to go back over 30 years and pull either tax reports that show that my W-2s is showing that I've been working there, or a payroll deposit, payroll stub, or a bank statement that showed that I had been working there at Rockhurst for over 30 years. I went in ready for bear on this. And so I went in, I said, "Okay, you wanted proof? Here's proof." And I put that down on the table. They were blown away. Even though it says, keep 10 years of tax records and things for 10 years, I have kept it for, forever. And thankfully I did, because it really did save me as far as that issue was concerned. A safe deposit box. What you can do is you can run a safe deposit box at a bank, local bank. And those are things that you may want to put aside and put into to make sure that you have copies of this stuff no matter what. It's going to be kept safe. You're not going to lose it or anything like that. Anything like wills, death certificates, military papers. Let's say that you have gotten out of the service. You need to make sure that you keep a copy of your DD-214. Serial numbers, photos of valuables. Let's say that you have a really expensive or really valuable ring or earrings or watch or something like that. Take a picture of it and put it in the safe deposit box. Anything that needs to be kept in forever, put it in a safe deposit box so nothing can get to it. When you start thinking about computer records, all right, you need to make sure that you have backups someplace. It says storing records like in the cloud. So for example, all of my stuff I store like in a Google Drive or a Microsoft OneDrive. Whenever I make a change to a document, it's updated. All of my stuff is kept in the cloud and it's very safe. It's not just on my computer. I also have an external drive that every once in a while, about once a week, I back up to the external drive. So I have the stuff that's on my computer, it's backed up to a drive on my desk, and it's also backed up to the cloud. This way, if you've ever had a hard drive crash, you'll understand what I'm talking about here. This way you don't lose everything. Things that you may want to keep, your budgets, summaries of checks and transactions, income statement tax returns, things like this. These are all things that you may want to keep on your computer and make sure that you have a backup. Then there's a lot of stuff that you don't need to keep. A lot of the receipts that we get on a day-to-day basis or something along those lines, unless it's going to be used for tax purposes. So make sure you're dumping stuff that you don't need. One of the things that you may want to do is pick up a shredder. Lots of folks have been found to have been going dumpster diving. They find personal information and then they steal people's identities with that. Use that shredder to make sure that that doesn't happen. So one of the things you also want to think about is the idea of personal financial statements. What this does is it gives you an idea as far as where you stand and helps you with your goal setting and the things that you want to do. Now, you have a balance sheet. Now, a balance sheet is a snapshot in time. It says, okay, what is it that I own? What do I owe? And so what is my net worth? You take out, you identify what is it that you own and what are the values of it, what is the dollars, how much do you owe, and hopefully you're going to have a positive net worth. All right? Now, in putting together your personal balance sheet, identify your liquid assets. Liquid assets are things like a checking account, a savings account, things that can be turned into cash very quickly. Then you have your real estate. Maybe you have your car, maybe you have some of the other personal possessions, things like this. And when you list the items that you have, do not list what they initially cost you. What you do is you list how much are they worth today. So for example, if you have a car that's 5 years old, it might be half the value of what it was that you paid for it. Then you start to determine how much do you owe. Well, how much do you owe as far as your credit cards? If you have a mortgage, things like this. And then what you do is figure out what your net worth is going to be. So the first thing you do is start thinking about, okay, so what are the current assets or the liquid assets that I have? And then any kind of fixed assets like real estate and things like this. Then your personal possessions. Come up with what your total assets are. Then you start thinking about how much do you owe on your stuff, okay? So maybe you have some charge accounts. Maybe you have a mortgage. Things like this. So how much do you owe? In this case, there was $99,000 that was owed, almost $100,000 that was owed. Total assets of $259,000. Subtract out the liabilities from the assets, and you get your net worth. And when we call it a balance sheet, what you do is you say, here's my total liabilities, here's my net worth, add those up, and it should equal your assets. So your assets minus your liabilities is your net worth. Okay, now net worth is not how much cash you have available. The cash is just the stuff that you might have stuffed under your mattress, it's your checking account, things like that. The thing is, when you start talking about real property, like real estate, cars, things like that, it may take a while to convert that into cash. Your assets is your liabilities plus your net worth. So your liabilities plus net worth should equal your assets. When you start talking about insolvency or bankruptcy, okay, that's where you can't pay your debts and your liabilities are far outpacing your assets. How can you increase your net worth? Main thing is reduce your spending. Cut back on the $5 cups of Starbucks coffees, things like this. That can help you as far as increasing your savings to increase your net worth. Then you have what's called a cash flow statement. A cash flow statement is like a checking account register, where what you're doing is you're saying, okay, so how much cash have I received during a time frame? How much went out? What did I spend? And do I have a surplus or deficit during this time frame? Inflows are your deposits, outflows are, the checks written if you write checks. Lots of folks are using debit cards now, things like this to pay for a lot of stuff. I write very few checks. Most of my bills I pay electronically through my bank. A lot of times I will pay for things with just a debit card. When you're creating a cash flow statement, identify what your income is. Now, there's a difference between income, okay, your gross salary versus your take-home. Your net pay or your take-home is what's there after the taxes and things like that they take out. A lot of times people think about, okay, well, here's how much I'm making. They're looking at gross. Folks, you need to look at net. In other words, after the tax, things like that. Discretionary income is what's left after you've paid all your bills. Record all of your cash flows. Fixed expenses would be things like a car payment. In other words, every month you have that specific amount that you pay. Variable expenses are things like some of your utilities. During the winter, your gas bills may be higher than they are during the summer. So that's variable. This might be an example of it. Here's your income, okay? Here's your net. Here's all your cash outflows. Here's what you're winding up with as far as a surplus or a deficit. One of the things to think about also is putting together a budget. Budgets will help you figure out, okay, so here's a particular goal I have. So how can I manage my money so that I can achieve those goals? So that you can live within your income means, spend wisely, and reach the financial goals that you're looking for. What you do is you set your goals first and then estimate how much income you're going to have. A lot of folks, if they're working a regular job, they know what their income is going to be each month. For some folks who may be self-employed, it's going to vary, and so budgeting is a little bit tougher. One of the things that you really want to do is always pay yourself first. So you get your income in, you get your deposit, pay yourself first. Put some money aside for an emergency fund somehow. Then set aside money for your fixed and variable expenses. And then after you've put together that plan, you start recording what it is that you've actually done. Review it after a particular time frame. Could be a month, could be a week, however you want to do it. And then adjust your goals and things like that as necessary. The book also gets into some of the ratios that you might want to think about in analyzing your current situation. The debt ratio is how much debt do I have to my net worth. So in other words, in this example, $25,000 in debt, $50,000 in net worth is a 0.5. And what you want is a low debt ratio for, if you can. Keep that as low as possible. Current ratio is your liquid assets or your current assets divided by your current liabilities. So in other words, how much do I have in my checking account, my savings account, and then how much do I owe that's due by the end of the month? Your liquidity ratio, your liquid assets, in other words, your current assets like your cash, checking account, savings account, divided by your monthly expenses. Debt payments, okay, to your income. So in other words, how much am I paying in debts, okay, less the mortgage. How much am I paying as far as my debts, my credit cards, things like that, to my income? You want that low. And how much are you saving? What is your savings ratio? These are some things that will help you analyze how well you're doing as far as your budgeting and your actuals. Some of the common goals that people have: if you're single, you're going to have different goals than if you're a married couple or if you have kids. So this just gives you some ideas as far as some of the goals that people may have and things that they may want to set. This is an example of a budget. In other words, here's my plan, and then what you do is you capture, here's what my actual is. This is where the record keeping becomes so key. This is giving you typically how much to set aside for various expenses as you age and as you change as far as your stage of life. So for example, if you're working and you're single, set aside around 30-35% as far as housing is concerned. You're not going to be making as much as you will down the road, and so you have to think about, my housing is going to be a little bit more of my income. What are you doing as far as transportation, things like this. Another thing to think about as far as managing your money is to think about a SWOT analysis. SWOT stands for strengths, weaknesses, opportunities, and threats. Strengths and weaknesses are things that you can do something about. Opportunities and threats are things that are outside of you that you can't do anything about. And so you go through and think about, okay, so what are some of my strengths as far as my money management? What are some of my weaknesses? What are some opportunities that are out there that I might be able to take advantage of? And what might be some possible threats that I may want to see what I can do to avoid? So just think about doing a quick SWOT analysis. When you start thinking about budgeting, it needs to be realistic, folks. It needs to be flexible. You need to stay on top of it. There's different ways of doing it. A mental budget, nobody really knows what it is that they're doing. The main thing is to write it out. Write that sucker out. And another thing to think about is using some of the spreadsheet software that's out there that will help you pull all this together. And there's all kinds of apps that you can put on your phone to help you track some of your expenses and things like this. And so an example, when you're thinking about managing your money, think about your balance sheet, your cash flow statement, and then your budget. These are some of the things that will help you analyze what it is that's going on so that you can increase your net worth. What you have to do is make sure that your inflows are going to be greater than your outflows as far as in order to make sure that you are increasing your net worth. And when you start thinking about saving, again, pay yourself first. Write a check each payday, okay, to put it in someplace, or use payroll deductions to put things automatically into savings. That way you never see it, things like that. Think about your savings amounts, okay? How much are you saving? And put your goals into specific amounts. Things like, I'm going to set aside $15 a week. Just start small, $15 a week to save for emergencies and things. So when you start thinking about some of the components of wise money management, all right, it takes practice. It takes keeping financial records and having a system to keep them all there. It takes going back and analyzing, where are you at? What are your assets? What are your liabilities? What is your net worth? And then also, how am I spending my money? What's happening as far as my cash flow? Be thinking about the 7-step budgeting process where you're setting your goals, estimating income, pay yourself first, set up an emergency fund, budget some of those expenses, record it, make sure that you're capturing everything, and then go back and analyze and make some changes. If you have questions, give me a shout.